So, I mean, we talk about the U.S. There's obviously the Fed and the potential for tax reform. Which do you think is more important this week?
Tax reform is, from our point of view, more important on a multi-month basis. Clearly, there's a lot of focus on the Federal Reserve and the likelihood that they're going to hike rates in December. That's pretty much baked in the cake, as it were. The focus there will be on the statements, but tax reform has potentially a much more long-lasting impact, both on U.S. yields and also on the U.S. dollar.
Yeah, certainly, and hopefully it gets that long end much higher than the current levels right now. Now, I've seen you've raised the probability of the passage of tax reform to 40%, 75% if you measure it within the time horizon of first half of next year. What's changed for you? And do you think 75% also bakes in the type of tax reform that actually we should be hoping for?
Sure. It's a great question. I mean, we were pricing a 25% chance this year. We've increased it to 40 just recently. The reason is because there seems very strong momentum in Congress in terms of trying to get this through and trying to get a bill before year-end, and particularly in the context of the Alabama election, which could, impact Congress and impact how Congress looks. So, well, we have increased it to 40, but our base case is still that, just given the hurdles that Congress faces in terms of trying to get a unified bill, a bill that both sides agree to in a relatively short period of time. And of course, we have the December 8th funding issue to get over as well, that our base case is first half of next year that we will have U.S. tax reform, and that is certainly something from our point of view that markets are not pricing in.